to be covering US30, everybody's favorite pair. US30 is a beast by itself. It's definitely a beast. It moves thousands of pips really fast. It moves thousands of pips really fast. But guess what? You still can get ahead of US32, just like anything else. I remember people were saying that how aggressive gold was, and gold was, this and that and all that stuff. I still love gold. But guess what? I love me some US30 now too. And it seems to be more people in the group are loving up on US30 because how many pips it moves. And guess what? It still follows the rules. So I tell you guys that the pair still follows the rules. What I mean by that is if I drop a level of support and resistance or a trend line or even a harmonic, it's probably going to follow it. That's what makes gold so simple. Even though people say gold is hard, that's what makes it so simple because gold literally follows the rules. It does what it's supposed to do technically. I say technically because none of these pairs have to do anything, but gold definitely does what it's supposed to do. Now, me just looking at this chart, I see all kind of moves on it that we caught already, all kind of harmonic patterns on here. I'm not saying every single harmonic pattern that we drop is going to win, but so far in US30, I think only 2 have lost out of probably like 12 of them. That's pretty dang good. So I'm gonna show you, how we catch them. I found that my first problem when I went to US30, I was looking at it on a 4-hour time frame. So looking at this on a 4-hour time frame, yes, a lot is happening, but it's not clear what's happening. It's just stuff just happening, right? And what I mean by that is you see not a lot of movement, not a lot of movement. So on this, I had to go down to a smaller time frame. So I'm going to daily and show you guys too. In a daily, yes, there's a big drop off happening, or a big drop off happened, but for the most part, it's so much going. It's so looks like so little movement on here that you would have to drop down to a smaller time frame to catch these moves. Because even on US30, like this big drop right here, which probably made somebody's decade as far as money goes, it's 100,000 pips. That's crazy that it can even happen that fast in US30, but that's how US30 works. 100,000 pips. But on a time frame this high, it's going to be real hard to keep up with all the moves. So let me actually move this right here over real quick. This is all in my way. So in this, I found that on US30, I have not been drawing up my levels of support, resistance, or trend lines. What I've been doing is, I'll show you guys what I usually do. Usually I come on a pair and I'll just drop my lines, my trend lines. I'll grab like this and go across and see what's going on with what. And I'm not saying that they don't work on here, right? What I'm saying is you kind of don't really need them to be profitable with this. Now I'm saying I just dropped that trend line and you see how price tap all through here, respecting that trend line. But this trend line is not necessary for us to win on US30 at all. A lot of y'all not. Harmonics will definitely, Harmonics and US30, they go hand in hand. They play well together. I'm beating everybody out. They definitely play well together. So like I said, I can come on here and I can draw trend lines and look, hey, a break and retest happened, a break and retest and rejection, but that ain't what we're here for. Go down to the 1-hour time frame, that's when you start to see things a little bit more clear. I go down to even further, like the 15-minute and the 5-minute. When I first came here, I grabbed the 5-minute and I was like, oh, I started to see some things on here. So US30, it's not the big bad monster that everyone said it is. Yes, it does move massive pips, but if you can trade harmonics, I feel you can trade on any time frame or any level. So I made this I actually made this a 15-minute line. I make this red. And again, when I come on here and trade this, I usually don't put these levels of support and resistance on it, but I just dropped that one because I saw it very easily. I'll drop one more just to see where we at. Bam. It makes life real easy. You guys see where it's at, right? The support and the resistance. I'll drop one more like up here too. So you guys see how that works. These black lines are trend lines. I actually want to erase those so we don't need them. I'll just show you that they work on here too because they work on everything. Now, back to this. I want to say this when I first got into this right here. Was this the move I got into? Was it? I don't think it was. It looks close to it. I don't think it was. But on this, just like anything else, you guys know how all these harmonics work, man. First thing you're going to do is grab your fib. Grab your fib tool. Mine is down here in my special tools. Grab your fib tool. And let's see if this joint lined up right. I think this next point might be too high. It is. Dang, it was too high. So this is close to being a Gartley, right? So this is a perfect example before I even get into going in depth on US30. This is a perfect example of when a plan comes together, even though it wasn't supposed to come together. Now, looking at this, I'm expecting the Gartley pattern on here. Why is that? Because I just grabbed my fib tool, my impulse leg right here. This is my impulse leg right here. That's the beginning of it. That's my X, that's my A. So this is my impulse leg. But look what I have here, retracement, back to 618. But here comes the problem. This right here, what does that mean? That means it looks like to me that point is higher than my A point. Now we all know if your C is higher than your A, what does that mean? Pattern is invalid. But I told you guys before, you can have an invalidated pattern and still make money off of it. How so? Because there is a move called a double top. A double top is also known as the M formation. So looking at this, you will see, if I go like this, it's like an M to me, right? That is definitely an M formation. Now, with the M formation, how I would approach this, knowing that this pattern is now invalid, how I would approach this information is kind of like how I approach the head and shoulders. What I would do with this is, now I know I'm not big on candlestick formations and stuff, but oops, I didn't do that. I'm not big on candlestick formations, but this is a pretty nice, turnaround candle right there. So me seeing this and seeing that price now wants to go down, I would not hop directly into this. I would wait until price actually got below a solid level. So just looking at the strength of this fib right here, this line right here, this black line right here, I don't know what level that is. I'm not looking to the right, but whatever line it is right there, it's a pretty solid level if you look at it. So this is, somewhat of a little, that's the 236. It doesn't matter. The fib line doesn't matter. This is more of just a line. Let me grab one of these lines right here to make this make more sense. So me knowing that this Gartley pattern is invalid because this point is a little bit higher than that point. Even though it's a little bit, it's still higher. It is invalid. We don't want to start, doing that and then start reaching for moves that ain't actually happened just because you think like, oh my God, I see it. But no, if you don't follow the rules, don't hop into it. Like literally, it's just that simple. So now that I see that though, but I see it's a nice little level of resistance right here. Resistance. That's a nice little line right there, which is also support right here. So by looking at this and resistance right there, me looking at this move right here, I can be like, all right, how would I get into this if I was looking for a Gartley pattern, but it got invalidated by this point right here because it's too high. What I would do is actually, I wouldn't sell this off the rip right here because for all we know, price can just go like, bam, keep on going up. We don't want to get stuck with price shooting up on us. So I would wait until price actually broke this level of support right here, and then I would get in this for a sell. And yeah, you might have gotten this for a sell right about here, and then like, oh man, it's going back up. But guess what? This is nothing but a break and retest and a rejection. So you could have still made pips on this, even though your pattern was invalidated. Now, what's funny about this pattern is, well, this non-pattern is, it still played out. So even if, let's say this price right here didn't happen, even though it did happen, it still went 886, rejected price back to B, which is kind of funny to think about because even though, let's just say this pattern was legit, it still followed the rules. I tell you guys all the time that price goes back to B, right? So this is also ugly Gartley right here, even though this wasn't a Gartley, but just look where price went back at. So this is how that back to B thing works. See how high this point is? It's higher than that point. I mean, this is an invalidated pattern, but this is how funny how the back to B thing works because even though this pattern was invalidated, where the hell? Oh, there you go. Where I'm looking for back to B. Bam. So price goes back to B. That's my 86 entry right there. Look, was the first point price went at. It went right back to B. And again, this was an invalidated pattern. But why that works and why that back to B thing works so much is we're gonna act like these patterns, we're gonna act like harmonic patterns don't exist, right? All that's happening is on a grander scale is a move, one move, and then it finally breaks this level of support. You can see right here, that arrow, that was support. Price rejected off of that. Right here, that's support. Price rejected off of that. Right there, that's resistance. Price rejected off of that. All this back to B move is, honestly, is price breaking that level finally, and then going back to retest it. So that retest of that move is really your price going back to B. That's why I always made it the guaranteed take profit for, because if a pattern is going to complete or if a move is really going to happen, it's going to do that back to B move. Even though this was an invalidated pattern, it still went back to B. Now, on a smaller scale, let me actually go up in here, like right, I'm gonna draw a box right here, right here. I know you guys see it right there. I know y'all see that. I'm gonna go down even smaller. I'm gonna go to the 5 minute. Let me go see if I can find this green box again. Because on the 5 minute is really where I've been seeing US30 do a lot of work because there's so much moves that happen so quickly on here. Now I want to say we actually caught this right here on this 5 minute, but look at this here. Look how perfect this played out. I know y'all see it. I know y'all see it right there. Right there. Looking for any kind of harmonic. This could be a bat, this could be a Gartley, but what I see is an M formation, and that's what I like to see. M formation, so I'm gonna grab from this low right here all the way to the top part. So X to A. And this one here is pretty dang close right there, but it did not touch. It can touch one, but it can touch A, but it cannot go past it. So this one is pretty close, but guess what? That joint ain't touch it. So we good, and we're good to go. So now I see this. I know I'm looking for a Gartley pattern. How do I know that? I have impulse leg, X to A. I have a retracement of 618 right here. You see it, 618. And then price went back up. This right here is not too important. As long as this price does not go past that. So off the rip, I see this information. I'm like, all right, I see what's going on here. Let me now grab my fib from here to that actual point and look at my money zone. Oh, it's about to be doubled up. Money zone right here. Money zone is 1272 to 886. Bam. So now I have that. That lines up perfectly. Now, in an ideal world, this move would have been caught before this. And I'm pretty sure we did catch this move before this little Gartley right here before this. But look how perfect that entry was. You might have had a little bit of pips to draw down, but play this out. That joint went straight back to B instantly. So that back to B move on this, you'd have had negative, you'd have been down 400 something pips, honestly. This is a small move, but you would have gained 1,500 off the rip, 1,500 in 5 minutes. So you'd have 1,500 pips in 5 minutes. That's why people say when you're trading US30, you want to at least have $1,000 account, because even if you trade 1 cent on this, that 400 plus pips, that's a chunk. That's gonna be a chunk of your account if you have a $100 account. I honestly don't think that US30 even allows you to trade a 0.01 lot size with a $100 account. It won't even let you put the trade in because it knows how fast US30 works. But US30 still follows the rules. Like I'm saying, if you come on a pattern and you see that, it does require some back testing. I'm not gonna lie to you. I'm not the biggest back test advocate, even though I probably should be. I don't back test very much because I usually end up back testing on my classes. But my back test ends up being, I'll come on a new pair and I'll start seeing if I see some harmonics. If I see a harmonic like forming up, I'll fib it out and see what it does. And then if I do it again and it happens again, I'll see what it does. And I usually don't go back in time to see what's happening. Even though I probably could, but I feel like if it's doing it now, like still, if it's still doing it now, if it's still doing it in live time, it's gonna, it's following the patterns correctly. And that's how, when I put my first trade in the US30, I was like, okay, it's definitely following the patterns. The first pattern I drew on US30, it played out nicely. I didn't enter it yet because I wasn't ready, because I was just testing the waters. But by about the third or fourth time of me seeing that US30 just following the rules, I'm like, all right, I see what's going on here. I definitely can get into it. Now looking at this is where price is currently at. What do y'all see on this? I know y'all see it. I know y'all see this big W formation right here. So same thing, even if this doesn't equal out to be a pattern, I still see almost a perfect W formation forming up right there. You see that? So price probably gonna end somewhere up here before it drops. That's what expects to happen. So I'm pretty sure this is gonna be a bat, not a Gartley, because this retracement part looks so low. But let's find out. Let me actually fib from the tip top up here. Does it even hit? It didn't hit. Now, in some people's book, they'd be like, you know what? It doesn't matter if it didn't hit. I'll still take it as a bat. Not I, said the cat. If this thing don't hit 0.5, we ain't taking this as no bat pattern. So what we don't want to do is get into the bad habit of taking up, any old pattern and thinking that it's something that we want it to be, and it's not. That's not it. Because what ends up happening is you end up getting caught, and you don't want to get caught slipping on US30. I'm keeping it real with y'all. Because when someone's moving 1,000 pips in 5 minutes, you do not want to get caught slipping on US30. Now, again, this is a nice W formation, but on this one, since it didn't hit that 0.5, I'm not chasing it. But what I do possibly see, let me see something real quick. Let me see what we got. Nope. See, I thought I had something else here, and it's not there either. And the reason why it's not there, you guys don't know I'm even looking for. Hold up real quick. Let me show you guys a complete picture of what I'm looking for real quick before I start talking. So yeah, definitely not there. I was like, okay, maybe this would be a cipher. But my retracement, where's my arrow to at? My X to A to B did not hit my 382 minimum. Therefore, I'm not looking for the cipher no more. Now, there's multiple ways you can trade any pair, but with any move you see, okay, you can test the word and say, okay, maybe I got a Gartley, no. Maybe I got a bat, no. Maybe I got a cipher, no. So what's next? You still can make money off this pair because well, I told you guys, you can have an M and you can have a W formation. Another safe way to get into an M or W formation is just wait the price breaks the neckline. Now, what the heck is a neckline? You're probably asking. Think about a head and shoulders. Think about a human body head and shoulders, right? You got your right shoulder, you got your neck, you got your head on top of it, you got your left shoulder. I can't remember right and left, my bad, y'all. So think about it like this, right? This, let me use this as an arrow. Of this move, this would be a neckline right here. This big old black arrow. This would be a neckline right here. What do I mean by that? Don't think of this as conventional head and shoulders because it's not. This is not a head and shoulders we're showing you. I'm just showing you a neckline of a formation or of a movement. So what that means is this is your first move, right? It creates this neck right here. So think about when you're doing a W, you have the 2 points that come together in the middle. That's your neckline, and so price goes back down. Now price needs to break this for price to continue going up. Now, your chance of getting this trade would not be when price comes to this and turns around. You're not looking for a sell on this. You're looking for price to go above it. So this would be one of the instances where you probably do a sell stop or just wait until price gets above it. So let's say this is it's a tip top of your neckline, right? So when price breaks, not sell stop, but buy stop. So when price gets above this point, where's my arrow tool at? From right here, price came right here. You're not looking for a buy yet. But this point would be buy stop point. Now, again, you're probably wondering why. Hold on real quick. Let me take buy stop. This would be your buy stop point. Now, I like to play the safe role. I actually move my buy stop point up just a little bit. Why do it just a little bit for? Because we all know price is known for doing something like this. Price to push up like this and then hit it and then be like, yeah, I'm not like that. I'm going back down. Next thing you know, you're stuck holding the gun. Always, we want you not to get stuck, and draw down for no reason. So I do my buy stop a little bit above that because I want to know that price is going beyond that point. So with a buy stop or even with a sell stop, with a buy stop, you're expecting price is under where it's at. You're expecting to go like bam, straight through it. So with your buy stop being right here, no matter where you get in price at on this side, with your buy stop being a little bit above that neckline, you know that when price pushes up through it, you're in this trade for a buy. So you're already in this trade for a buy already. And this one happened to perfectly play out as a break and a retest and a rejection. So even if you just got to the to this point up here and not worrying about the retest and rejection, you would have still made hot little 1,100 pips just that quick. And that small move because US30 plays no games with no pips, but that'd have been an easy 1,000 pips with a break of a neckline. Another example of that would be you can actually do it on anything, which is crazy because even on Harmonics, even on the Gartley, you can trade them that way. Like I said, there's so many different ways you can trade the same thing. I know I always use the Gartley because the Gartley is my favorite pattern because I trust the Gartley more than I trust the bat because I like that entry zone. I like the retracement. I like all that stuff on the Gartley. The bat has some questionable moves in it, but I mean, it still works, but it's some questionable moves in it. So let me see my fib from here to here, what I got on here. So from here to here, technically, let me rewind this a little bit. All I have is this information right here. So on this little move right here, we're looking at this little box right hither. The big pattern wasn't doing it for us, right? It didn't make a pattern, but we could have still traded to the neckline. On this little section right here, what do we have? We have a X to A to B. You're probably thinking to yourself, okay, looks like a Gartley. Price did go past 618, but it only wicked it, barely tapped it, wicked it. So this is still a legit Gartley. It did not close up there, meaning that there's not a body like this, not a fat piece of that above that black line or that 786. So we good to go. So now that I have that information, for teaching purposes, I will fib from my A to my B, see what my C is. My C came right to 786. If you guys know what I'm talking about, this would be my my X. X is always going to be your first point. Always your first point. That'd be X. and this would be A. This would be B. This would be C. Now, let you guys know right now, this whole class is going to be US30. So I'm showing you guys different ways of how you can get in trades, all different kind of ways. But all this stuff works on everything. We just had to be covering US30 because I know US30 is a new hotness that everyone's falling in love with. So I'm covering US30. But this stuff works on everything. So, you know, my C is now 786. You know, your validation C zone on a Gartley is 618 to 1. My ideal, though, is 786 to 886. That's where I want price to fall at. If price falls in that 786 to 886 on a Gartley, we really a go. Because I know that if I decide, you know, to jump the gun and sell or buy from C to D, I'm in a good place because I know there's not too much space between 786 and 1 and 886 and 1. Now, why does that matter? Let's say you decide you want to. I want to get not greedy. I want to get aggressive. I want to buy. I want to buy when price hits 618 off of, oops. Let's say I want to get greedy. I want to buy when price hits 618 based off my fib right here, right? I would have had drawdown for no reason. 618 is the minimum that you need for your C point. I don't ever want to get in for a buy or a sell on my C point in a pattern at the minimum. And I emphasize that because what can end up happening is price is going to push to 786 or 886. Now that might be 5 pips in some pairs. That might be 400 pips in other pairs. So you don't want to get caught in that I don't know range. I'd rather, you know, get in it when it's already completed that C, when it has a solid completion of a C. You ever seen somebody, you know, on a basketball court and they throw up a shot and it still goes in? You're like, how the hell that shot go in? That was a lucky shot. You don't want to get caught in the C trying to buy it from 618 and this happens to go your way. And next time you're like, you know, I'm trying the same lucky shot again. Next thing you know, price goes all the way down to 1. Now you negative 400 pips for no reason, but your pattern's still valid. Because then you'd be jacked up for no reason. You definitely don't want to do that. So we have a 786 touch, perfect 786 touch. So this move right here is all about protecting your account. We have perfect 786 touch. So, you know, 618 will be our first point of our sell on this. We know we're going for a sell because it goes X, A, B, C. I mean, D is going to be up. So if D is going to be up, you know, this is going to be a sell right about, where's my line at? First move, 786. That'd be a sell right there. So it'd be sell and make this thinner because it's kind of thick right now. Now, I'm going to take my fib again, and I'm going from actually where B ended at, right up here, down to where C ended at. Now, my second point is 1272, which is actually covered up right by this buy limit. So either way, but it's buy stop. Either way I go, this is my entry zone for this trade. It is from this, that's a pretty big entry zone, 1272 to 886, right there. Hold on, I did that wrong. I'm tripping. Not right there. This 886. There you go. I was like, man, that's pretty big. So now we have our zones together. That fib was just now from B to C. How you get your money zone. You guys should all know the money zone right now. So let's play this out, see what happens. Playing this out, price tapped that perfectly. Look at that. What I tell you guys, price always, if your pattern is going to win, price always goes back to B. Now on this, back to B was 202 pips. That's either a scalp from some, or 250 pips. Either that's a scalp for somebody or that made somebody's day. So that quick little push down right there, you probably would have caught 700 pips on that just because it happened so quick. Remember, these are 5-minute candles. So in that 5 minutes, you would have caught 700 pips just that quick. And then it proceeded to go up. So guess what? You could have had your sell limit right here, bam, back to B. Then your buy stop when price breaks that, bam, you'd have been win in a win. Just that quick, back to back, win in a win. You have a Gartley pattern right there, and you have the break of that neckline right here in the middle. Like I said, there's so much movement that happens on these pairs. I don't want to get you guys confused with how much stuff goes on, but this was your Gartley pattern right here. And just that quick, like I said, this small little 5-minute pattern would have won you 700 pips, and then it would have, you know, did the rest of this thug dizzle they want to do. So when it stops, we'll go on to another movement in all this madness right here. Whenever it stops. Okay, I'll stop it. But yeah, so now we have that. I'm erasing all that, A-L-L-A-T. So let's see what else we got. Oops. So again, I'm sticking with the 5-minute on this. And I know you guys see this right here too. I actually want to say I drew this up too. This M formation right here doesn't have to be the prettiest, doesn't have to be perfect, but it looks real Gartley-ish. Now, again, this red line right here was drawn in the 15-minute. This is just for, just showing support and resistance. You don't actually have to do it on here, but I suggest if you're new to do it just so you know where price can possibly go at. Honestly, a lot of stuff about trading is knowing where price can possibly go. If you know where price can possibly go, you can get ahead of it. So now I have this big, long movement right here. I can now grab from this lowest point right here and pull to the top and see what I got on my retracement. Now on this, I did not get a 618 touch. So now I know I'm looking for a bat pattern because price is in this 0.5 area and did not touch 618 right here. It passed 0.5 though. So now that I have that, and again, this is just showing you how US30 follows the rules so much. You don't have to have the whole movement to get in a trade. Remember, the bat pattern doesn't have an entry zone. It has the entry spot. And that bat pattern, your entry spot is 886 right here. And look where price went to, 886, and then booyah. Ooh, that's a chunk. That is a major chunk of pips right there. Now, just for example purposes, again, I'm measuring. We got X right here. First point, X. Next point, A. Where's my A go at just now? That's supposed to be A. A. Retracement, B. B did not hit 618, so we're looking for a bat. C, whatever this measurement right here is on C, that's what it's going to be. That's going to be C. C. Now I measure it from A to B to get C. And look what we have, a perfect 886 touch. Now, what I was just showing you guys an example of why, let's say I caught price when it was, let me rewind it way back here to about right. We're going to say about right here. Let's say I caught price right here before this wick started happening, right? So on a bat pattern, honestly, all you need for your C is for price to be at 0.5 to 1. So this is your whole validation zone for your C pattern on this bat pattern. Now, that is a really, really big zone. So let's say you want to get aggressive and you want to sell. Let's say you got in at this point. I'm going to rewind even more. Let's say you got in right there. Accepting the mandatory minimum. We ain't talking about jail time, but let's say you got in right there, right? So look, I'm going to go way back to the left. I'm actually going to erase this. I'm going to hide this first fib, not to confuse you guys. So this fib is from A to B. So this fib from A to B is going to give you C. And this is why I say, I don't get aggressive with selling C's unless it hits 786 or 886 because it's so much closer to 1. So this big blue box, this is your whole validation zone of if you want to get aggressive and sell C down, you can sell C down. Now, all you need on a bat pattern is 0.5 minimum, which you see price is at 0.5 right there. You see it? Price is right at 0.5 right there. So price is at 0.5. You're like, you know what? I'm going to get aggressive. That's all I need. My minimum, it got hit. I'm selling this. Or matter of fact, you're going to be less aggressive. You're going to sell when price hits 618. Now, again, I don't sell. I would never sell C to D when price is at 618. Unless I have some another setup on that that's going to make it look real good. But with this one, I'm going to play next candle. Bam. So you would have been at 618 and be like, oh, price is going down. I'm good. Like I'm selling this joint all the way down to the 886. So that would have been hot 1,000 pips on US30. 1,000 pips right here, just that quick. 1,000 pip candle. So let's keep on playing it. Price touched that 618 and know what it did? It said, yeah, I'm not playing your game with the 618 and this 0.5 stuff. I'm about to go up. Look at that. Price went up. So with this, if you're expecting price to go all the way down here, look at that space. There's so much space between this 618 and 1. There's 1,900 pips right there. You do not want to be a 1,900 pip drawdown. Even going to 886, 1,300 pips. You don't want to be in 1,300 pip drawdown on US30 at all because that can make or break your account or make or break your day. Imagine if you have a $1,000 account, you're trying to compound it. You have and going for 1,300 pips negative. Let's say you have a 10-cent lot size on there, a 0.10 lot size on there. Your whole account is gone. Just in one candle, your whole account is gone. And then price then proceeds to go all the way down to your entry and wick off perfectly. So you're even stuck for no apparent reasons. That's what I'm saying. So there's no point in getting aggressive in when price gets at 618 for a C or 0.5 for a C, decide you want to sell down. Just be patient. See what it's going to do. If price didn't push up here and decide to go down, you can still get in at the neckline break. You don't have to, sell this point right here. If you're unsure about it, don't get into it, because this spike right here was literally probably just to take everyone out that trade. Everyone who was in right here selling down because they saw this nice candle, this nice candle right here, they got trapped right there. You don't want to get trapped like that. So your bat pattern on this would have been X to A to B to C, where I actually went at, and C to D at 886, which was somewhere down here in this general area. My bad. Let me turn this fib back on real quick so I can see where it's at. Let me insert this second fib off. You don't need that one. So 886, I drew it out perfectly on accident. But this would have been your bat pattern right here, even though I know it's Gartley colored, but this would have been a bat pattern. Oops, not a spiral bat, but a bat pattern. Right there. Bat pattern right there, which would have yielded you, if you were patient with this 886 sell, a possible, let's say you just sold it down to about last level of support, 2,600 pips, and 2,600 pips, and then from your entry on up, it would have yielded you another 2,000 plus pips. So, I mean, that's a 4,000 pip move right there without catching the whole thing. Now, if you were real aggressive, just holding that joint the whole time, that's almost 7,000 pips down on one move on a 5-minute chart. That by itself is crazy. To let it play out. So you see it wicked up, spiked up instantly, and then it decided to, play the pattern out. That's what I'm saying. Like, there's so many ways you can approach this same thing. Now, I hope that you guys actually, are learning something from all this stuff that I'm giving you guys right now, because there's a lot of information in this. But I'm giving you guys so many different ways to trade the same thing. This is why, this is how I can tell you guys where to buy and where to sell at and stuff, because there's so many different stuff you kind of see just from putting in time on the charts. I'm not gonna lie to you. I'm not gonna sit here and say that, doing this trading thing is super easy. But once you've seen stuff happen enough, it's coming. It's like a nice play football. If I see myself come through the line as a defensive tackle and no one blocks me, I can bet you a guard is pulling to come get me, or a fullback's coming to try to get me for a trap play. I know what's coming. So, if you know what's coming, at first, you might get blown up on that trap play. But if you have seen it enough, you come to that line clean. As an interior lineman, you never come to the line clean. Somebody gonna touch you. So if you come to that line clean, your head ain't on the swivel, you might get pancaked. And we ain't got time to get pancaked on these charts. So what I'm saying is, I'm trying to make it easy for you guys, so you guys know there's multiple ways to do everything. So yes, we trade in US30 with harmonic patterns, but the harmonic patterns are just helping us, get to the common goal of winning, because you can win multiple ways. So let me now see what else we got on US30, because US30 be following the rules. What else we got here? Let me look. Let me actually hide that. Well, I'm just erasing them. I don't need to hide them. I'm getting these out here real quick. Get rid of all U's. Get rid of U. That was actually a perfect bat pattern right there. Did we cover this one right here just now? Did we cover that? I don't even know. My bad, y'all. I don't know if we covered this or not right here. Let me just see for example purposes. Did we cover this move? Another bat pattern. Oh, I actually did post this one in the group, didn't I? I posted this bat pattern right here. I'm just going to draw it real quick. X to A to B, B to C, C to D, which was 886. Now, this one has some drawdown on it, but it wasn't very much. So if you had drawdown on this pattern, you still could have made off, let's say, about 1,000 pips, but then you would have had like 1,000 pip drawdown. But then you would have hit like for 3,700. So, just simply patience on that would have worked in your favor. Another example of why, like I said, US30 just follows these rules of these harmonics so nicely. Another example, like right here, what we got? I covered this one already, didn't I? Yeah, I did just cover this one. I think I did. No, I didn't. There's so many on here, man. My bad, y'all. There's so many patterns on here. So let me look at this real quick. This little pattern right here real quick. I'm not going to rewind this one. Look what we got here. Fib, this impulse down. What do we have? Retracement, price touch, 618. Right there. Price touch, 618. Now we have that information. There's no point in me even doing A to B, because I can see that my C point is not past my A point. If my C point is not past my A point, this pattern is legit. Now I can see that the C point is also not very shallow, so I know it's not a 618 or like 786, probably 886. Let me see. Look at that perfect 886 touch right there. You guys see it? Perfect 886 touch. Now that I have that information, I can now finish my whole pattern off. My first level of sell would have been right here, so I can put my sell line right hither. And again, this would have been drawn up before price got down there, but you know, this we kind of predict moves that are going to happen. So this would be my first sell line. Let me make that not as thick. That's too thin. And then I now can fib from B to C. Oh, it's kind of cluttered over there. So let me erase this one. My 1272 is right here though, so I can see that. So my first sell line right here, it should say sell on it. Sell. And this one is too thick, so bam. So now we have all this information on this. We can draw the pattern. And again, just imagine that this stuff didn't happen yet, but it doesn't matter that it happened yet or not. I'm just showing you guys that this stuff happens back to back to back, X to A to B, B to C. This D took a while, but it's right there. Second entry at the top up there. So see, this is why I like the Gartley so much, because it has this entry zone. But this one, the entry zones in this one was so nice. So even if we just wrote this thing back to B, let's go back to B, which is about right there. I made this my take profit line. That's about B. I'm just taking a guesstimate. I can't really see because that's covering it up. It doesn't matter too much. We're not doing specific. I'm just showing you guys that, price goes back to B. So even though this one would have been, you'd have been positive and then negative and then positive and then negative. So you've been positive 900 something pips. Then if you got a top entry, you've been negative like 900 something pips. Then you'd have been positive 1200. But the plus side of doing this Gartley is you have a chance for 2 entries. Say you've been negative for a little while on both of these, but when you won out, you would have won double. And that double win is definitely great. I'm just showing you guys again that so much happens here. I do remember this right here. You know why? Because there's a cipher pattern right here in the middle of this, right here. So if I grab from hypothetical X to A, I have my 382 retracement, and then I go from back up there. Oh, this wasn't a cipher pattern. This was a smaller one. Unless it was a smaller one. I know the cipher pattern is somewhere in the middle of these things. If it wasn't that one right there, one of them I drew up where I had a bat, then I had a cipher, and then I had another bat another guard right behind it. It might not have been this section right here, but one of these sections had it like that, where it's like back to back, because these moves be happening back to back. Do any of y'all have any questions on anything that I just covered just now, but the necklines or the Gartley or the bat, or selling C to D? I know I covered a lot of stuff, or price going back to B. Any question on any of that stuff? Because I'm here for it. But I'm telling y'all, US30 is a whole nother monster by itself, but it's a monster that can be tamed, because if you can follow the basics or follow the rules of these harmonics, you definitely can tame the monster. I actually did show you guys the head and shoulders form up on this earlier too. But and it's still legit. This head and shoulders is definitely still legit. Let me erase this real quick. Head and shoulders, which was, I'm gonna draw a real generic one. It was about right here. Where is my box at? The heck? Okay, so I can move you around. Why can't I see you? What's going on? Why is this clear? Oh, that's why. My bad, y'all. I'm stupid. There you go. The head and shoulders right there. It's not the cleanest one, but it's definitely there. Now, the price came back down and rejected. So with this, does it follow the trend line better than gold? I wouldn't say it follows it better than gold, because gold has so many ups and downs, so many spikes, that those spikes usually go right to a trend line and test it out. What I can do real quick is just to show it out. I just erased everything off the chart just now. So what I'm gonna do real quick is, oops, I got ready to chat. Bring that back. Let's test it out. Let me go to the 15-minute real quick. I'm not going to draw it on a 1 hour or daily, because these moves are so big. It might not line up nicely. We can still test and see it. I'll start from the 1 hour. We're going to see if this thing lines up nicely with my just a bar. Let's see what we got. There's a nice little trend right there. So now let me extend this in each direction. I'll make it bam, trend line. So we got that. Now I'm gonna take this same trend line. You guys know how we do. We're gonna copy this joint down and see what we got. Nice little trend right there too. You know, the trend is your friend. And we're gonna copy this joint in the other direction. I don't need both of those. Hold up. We're gonna copy this in the other direction too. We're gonna copy. Oops, I'm tripping right now. Okay, hold up. Control and drag. We're gonna move this in this about right there. If you guys wonder what I'm basing these off, points like this, right there, then right there, and then right there, and then right there. It's enough touches to me to be like, okay, this is a legit trend line. All the stuff that happened in the past doesn't really matter. This is only a 1 hour time frame. And we're trading this on the 15-minute and 5 minutes. So we're going to see how these trends look on the smaller time frames. So on the smaller time frames, on the 15-minute, all these were drawn in 1 hour. See the rejection, 1, 2 touches, 3. It's a nice touch within the middle of that. 4, 5, 6. So this one here is definitely, it's the first one I drew. This is definitely a legit trend line for this right here. I'll make it pink. My bad. I definitely make that. It's a nice trend line right there. Now I'm pretty sure I can go down here on a 5 minute and draw even more. But just look in the future how price just comes back to the trend line, rejects it, rejects it, rejects it. Even that big spike I was talking about earlier on that C point for that move, bam, that's just a test of that trend line. So a person who doesn't use trend lines without even know that there's a chance that price can hit that. Because yes, technically, I emphasize technically, price moves in a zone, not a straight line. So, I mean, when price comes close to this, some people will count something like this as, oh, it's close enough, this is a touch. That's close enough, that's a touch. Because it's more of a zone, not a spot. But I don't like that, because then you'll be like, okay, this is a touch, but that's not a touch. This is a touch. This is a touch. So don't see price get close and be like, oh, that counts. Let it actually hit it, because if price don't hit it, you end up getting stuck again, just guesstimating on a touch, and it's not actually a touch. But I can bet you any money, as I always say, if I control and drag this joint one other direction, that these trends still hold up. So let me drop this, like, I'm gonna say, like, right here. Looking to the left, looking to the right, about right here. And, you know, I'm not saying force a trend on something, but you can almost find a trend. If you're looking for a trend, you can find a trend. But look how even how small that is in there. Price broke that little spot, came back to it, rejected it, and then broke and retested it. That's on the 5 minutes. So I know probably on a 1 minute, probably went crazy, but I ain't never going to the 1 minute because I ain't going down there. Don't need to be down there for no reason. So but look how price respected the same trend line again. I just copied the same pink one, and price definitely is respecting it. So I mean, yes, I guess your answer is trend lines work on everything. Now on US30, you can incorporate them, but honestly, the way these harmonics have been slapping on this, you probably don't need the trend line. The trend line might be an extra confirmation for something else. It might show you where price can possibly go at, but it seems to be, unless you want to use that strategy with trend lines and price going back there and breaking the retest, at the end of the day, a lot of these moves are just breaking and retest the trend line. This is a break and a retest of that trend line and a rejection, and then a break and then a retest of the trend line and a rejection. And it's just a rejection of a trend line. And I'm pretty sure this right here is a break and retest. If I copy the same trend line over, this is probably a break and retest in the middle somewhere. So let me grab this pink line one more time and drag this down to the bottom right here. And this isn't the cleanest one again, but look how price respected. And I'll make this one a different color just so you guys know. This is the third one I've copied off this pink line. In the middle, I make it blue and look at the respect again on this trend line. So like it is being respected. Definitely trend lines. I don't know why people are so against them sometimes, but look at that. Like I said, I can bet you any money that this is just a break and retest of the trend line. Look at that, break, retest, rejection. So I mean, there's so many confirmations of things you can see and do with this. You know, so many ways to have fun, so much room for activities. Now, if you guys don't have any more questions, I'll hop off, but I hope you guys actually learned something from this. I'm probably gonna upload this video tomorrow. It is 7:48. I mean, there's about 45 minutes, you know, a hot little 45 on US30. And I'm just showing you guys that, you know, if you find a pattern on US30, just drop that joint in the chat because they happen on a smaller time frame. I'm warning you. So don't come in here on a daily trying to find something on US30. It's a daily. Everything we just drew was in this one little section right here. Like everything we drew is down here. So none of this even happened yet, but I can bet you we can go back and find patterns through all of this. but it's gonna have to be in a smaller time frame because this daily ain't gonna do it for you on US30 unless you're doing some major swinging or some major, something like that. But right now, the way US30 set up and how fast it moves, this daily ain't gonna do nothing for you. So go down to that 1 hour, go down to that 15-minute, go down to that 5-minute on US30. Now, that's probably the only pair I would suggest doing that on because I'm not a big fan of the 5-minute at all. I'd rather work from the top down in a pair, as most people should do. You should go from daily, see what you see, 4 hours, see what you see, 1 hour, see what you see, 15 minutes, see what you see. I usually don't ever go to 5-minute, but on US30, you kind of have to because on a 15-minute, yes, there are moves here, but look how much more moves we found on the 5-minute. Like, it's so much more moves on the 5-minute. And with that being said, man, I will holler at you guys. You guys on my YouTube channel already on Modern Trades. Definitely, if you want to watch these videos, like and subscribe to it, man. And I will see you guys on the next one.